Today, crypto markets close out the week with a wild day of trading. The White House releases its guidance for U.S. crypto regulation, and Jake Boyle of Caleb Brown discusses what's driving post-merge volatility. Welcome to CNBC's Crypto World. I'm Jordan Smith. It's a wild day for cryptocurrencies, with prices moving off the lows by late morning but still in the red for the day. By noon Eastern, Bitcoin traded at $19,000, Ether dipped to $1,400, and the ETH Proof of Work token, which launched alongside a hard fork of Ethereum, fell sharply. Bitcoin's losses this morning put the digital currency down 7% in the past week, Ether, meanwhile, losing about 16% in that same time. Okay, let's talk about the top stories. First, we're now getting a glimpse into what the Biden White House envisions for crypto regulation. The first ever framework provided for the administration includes guidance on how to crack down on fraud and how the financial services industry could evolve to make borderless transactions easier. While nothing is mandated yet, the new directives turn to existing regulators, including the SEC and CFTC, for supervision. The framework also points to the potential for significant benefits from a U.S. central bank digital currency, or CBDC. The guidelines come about half a year after President Biden, through an executive order, called on federal agencies to look into the risks and benefits of crypto and release reports on what they found. Next, Galaxy Digital backed out of a deal to buy BitGo because it couldn't afford the billion-dollar price tag. That's according to a court filing made public on Thursday. BitGo claimed that Galaxy was still grappling with crypto winter and the collapse of several investments. The crypto custodian also claimed Galaxy falsely blamed the deal's collapse on BitGo itself rather than Galaxy's own finances. In a statement, Galaxy said it, quote, completely disagreed with the allegations in the complaint. Last, Crypto World host Kate Rooney sat down with FTX CEO Sam Bankman-Fried in a wide-ranging, exclusive interview. They talked about the liquidity crisis that hit crypto businesses over the summer and why FTX chose to become a lender of last resort.
Sam Bankman-Fried has played a key role in the crypto industry this year. He's spent hundreds of millions of dollars to bail out struggling companies facing bankruptcy and liquidity issues. The CEO, though, lives a relatively understated life for a billionaire. He drives a Toyota Corolla to FTX's offices in the Bahamas, lives with 10 roommates and a golden doodle named Gopher, and sometimes sleeps under his desk on a beanbag chair. I sat down with Bankman-Fried outside of FTX's headquarters to talk about his role as the industry's lender of last resort.
We only had a few days to make some of these decisions. What we basically came to believe was the following. The first was that, if possible, it would be extremely valuable to the ecosystem to backstop some of these places. First of all, just backstopping customers and making sure they're protected. But second of all, stopping contagion from spreading through the ecosystem, right? Stopping it from being the case that anyone who transitively did business with any chain of people who did business with one of the troubled assets themselves became troubled. And then the secondary goal was maybe there are good trades to do. Maybe there's an investment or acquisition that can be done at, terms that we'd be excited about, given the sort of need for capital right now. But that was usually not the standard we were able to hold ourselves to. In practice, the standard was, do we feel okay about this from a financial perspective? Like, does this look at least mediocre? Like not a huge loss in expectation, maybe a gain in expectation, hopefully, maybe not, was sort of the bar that something had to cross in order for us to feel comfortable, intervening there. And often we just weren't sure. Like, you look at a lot of these cases, they had 4 days before they were going to file bankruptcy. And so we had 4 days to do all of the diligence we could on the company, learn everything about it, understand the industry, their business, their customers, understand how we thought things were going to unfold, and then make a judgment call and wire money. I think the Voyager case is sort of an interesting one there. What we ended up doing was extending a sort of two-piece line of credit. And the first was $70 million. And that $70 million was money they could just draw on immediately, no strings attached. And we knew we might lose that. Then there's a larger line of credit, which would eventually have potentially plugged our best guess at the time as to what the complete hole was, but which had conditions on it. If there's just an immediate run on the bank here and the business is just going belly up and there's nothing we can do to actually save this, like, we don't want to just keep going through it. We very well may lose that 70 million. I don't know if we're seeing it again. And so be it. Like, we understood that risk going in.
Do you still have enough cash if you needed to do another bailout?
Yeah, we did, and we try to keep that on hand. Like we try not to empty the coffer, so to speak. We had a couple billion going into this, and it lines up roughly with the amount that we'd raised, over the last year, and on top of that, we had been profitable.
So billion-ish to deploy?
Yeah, and again, you get to definitional issues here of how much do we really feel comfortable deploying? Saying that there's another ballpark billion, that is sort of, completely unencumbered, certainly will get you within a factor of two, certainly, if the right answer.
You said FTX has a responsibility to seriously consider stepping into the time to save companies. Why did you have that sense of responsibility?
It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything, and so from a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and it was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
It's still too soon to tell if these crypto bets will pay off, but Bankman-Fried has continued that spending spree, most recently with Skybridge Capital. As far as how they're able to afford all of this, Bankman-Fried says FTX is profitable. He has kept costs low with about a tenth of the employees that other exchanges have. And the company has raised about $2 billion in venture capital money.
All right, on to our main story, and let's stick with markets. I spoke to Jake Boyle of Caleb Brown about this week's sell-off in crypto and how long volatility will stick around. So it's been a wild day of trading for crypto, and we've seen ETH down pretty significantly since the completion of the merge. Why are prices for major cryptocurrencies moving lower right now?
Great question. So it's a case-old study of buy the rumor, sell the news. There was a lot of anticipation leading up to the merge, given how much of a historical event it is and how many years we've been waiting for it as investors in the space. But then the reality is that cryptocurrency isn't in the greatest shape right now, and not much else is going on. A lot of people were moving their coins onto exchanges to take advantage of the airdropped proof of work token. That's happened now. Things are now moving forward, and people have sold the news effectively, and the markets are coming back down in line with the rest of the markets around the world.
How much interest is there around that proof of work token drop? You mentioned that there's a sell the news moment for the merge. Is that showing that sentiment for this new proof of stake ecosystem isn't quite as popular as some people thought it would be?
Well, I think that a lot of people were looking for the cash grab to a large extent. I mean, airdrops are not new to the cryptocurrency space, and a lot of the time, investors who receive an airdrop don't really look too far into the token. They just look at the USD dollar value, and they either roll it into another cryptocurrency or they sell it into cash to pay for the next holiday. So in this case here, it does look like general consensus across the market is that people are happy about the merge. They're happy that Ethereum is having these scalability upgrades, and there isn't really a leader for this new token that's come about and been airdropped. So it doesn't have that strength or that community behind it. And a lot of people are speculating it's, if anything, more of just a new revenue stream for that computational mining power that obviously cannot work on Ethereum anymore.
So for investors that aren't looking for a cash grab and are actually looking for a longer term investment, is this a sort of return to macro pressures? I mean, we had this period where investors could focus on the potential for Ethereum thanks to the merge, but now the upgrade's done. And do they have to look back to things like inflation or interest rate hikes? What's your take there in terms of where investors are pivoting?
I certainly think that's the case. We saw in June when the markets hit their bottom that Ethereum recovered a lot better than Bitcoin did, significantly better. In fact, the actual percentage of market share in the crypto space that Ethereum absorbed was quite significant compared to what Bitcoin consequentially lost. That, of course, is the merge being priced in. And I think that people were expecting the doors to blow off and Ethereum to hit new all-time highs right after the merge, but unfortunately that simply was not the case. Now people are thinking, well, what else is there to look at? And that's where things like the recent CPI announcements, that is the kind of concern people are looking at once again. We're seeing the troubles with traditional markets. We're seeing the issues of the cost of living surrounding the world. And we're moving into winter across America and across the UK and greater Europe. So as a result of that, they're the concerns that are on the forefront of people's mind. And the merge is unfortunately a part of history now.
There are some optimistic things happening for crypto right now. We had news this week that big Wall Street players like Fidelity, Citadel, and Schwab are backing a new crypto exchange Is institutional adoption still marching full steam ahead despite the swings in crypto prices this year? And does that show confidence in crypto long term?
I think a lot of institutional adoption does take a long-term stance on any asset class for that matter. From what we see as a company internally, they're not so phased about the short-term problems or the short-term opportunities in the crypto market. They're certainly not looking to grab a new airdrop and sell it off the next day necessarily. So I do believe, and as a company, what we see is that a lot of these larger companies are looking to see what the next rally of opportunity is. Is it going to be DeFi? Is it going to be layer ones? Perhaps Ethereum is the greatest play, or maybe it's just right back to Bitcoin. A lot of those conversations are certainly happening. We're seeing it day in, day out in our office. But of course, it's not happening with the same degree of retail excitement that we saw in, say, November last year.
Actually want to get specifics from you there. Where are the places of optimism for crypto right now? Is it DeFi or roadmaps for upgrades for things like Ethereum now that we have this proof of stake ecosystem?
Oh, well, in my opinion, and as far as Caleb Brown is concerned, DeFi is certainly the first thing that comes to mind. If we look at some of the issues that we had earlier this year with regards to Celsius, with Three Arrows Capital, the list goes on and on, unfortunately, with some of those insolvencies. One area of the ecosystem which got paid are the DeFi protocols. That to me, and that to a lot of investors and clients of our business, does prove that DeFi does work. And those people who were lending that capital, they received the capital in the unfortunate insolvency of the counterparty. So what does that mean for DeFi moving forward? And a lot of institutions, they recognize that, they see that, and they can see that this new technology class in loaning and banking facilities works. Regulators are going to have an opinion on the matter, and I'm sure that things, although they have been slow on the regulatory front recently, I'm sure that more will come in due course. And it does seem to be DeFi being the next major talking point or the next major institutional area of interest.
To your point, we got that announcement from the Biden administration just today, their new outlook for crypto regulation in the US. Obviously, they're looking at a CBDC there. Some of these guidelines that they put in place for crypto regulation, do you see that as something that will be overall good for the crypto industry? Is that something that will drive either institutional adoption or more stability for prices?
Well, I think clarity will drive institutional adoption. And right now, we don't really have that clarity as cryptocurrency investors. Until we get clarity on what that stance is, if it's an aggressive stance or whether it's quite a relaxed stance, it's that gray area that we're currently in and that degree of uncertainty that I think is sidelining a lot of institutional capital and a lot of greater businesses from investing in the cryptocurrency space. So, which I think is understandable because cryptocurrency is a sub-trillion-dollar market at this point in time. And in the grand scheme of things happening around the world, it isn't the most important part of our lives right now. But once we do get further clarity, and once, particularly from the USA and the federal government, then it is likely that we'll be able to predict more accurately what degrees of adoption are going to be. Right now, my opinion is we're still sidelined to a large extent, and we're not given that clear direction of what governments around the world are going to be doing.
All right, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.